What would you have to say to a passive investor who wants to sit on a sideline because they're foreseeing an incumbent downturn? How do you feel? And what do you say to that type of a person?
So I hear that a lot, especially now, kind of where we're at in the market, the economy, and I understand that everyone kind of looks at things differently, and everyone has their own comfort level with these types of investments or investing in general. The way I look at it is, as a passive investor, I mean, I have options, right? I could invest in these types of multifamily syndications. I can, put my money in the stock market. I could, keep it in savings. And the way I look at the stock market, it's very volatile, especially right now. I know at any point in time, I could lose 20, 30% on my investments or my net worth. And that's not going to feel good if that happens. And for me to recover from that, I basically have to double that loss to just get back to even. And that's really, really difficult to do, especially long term, and to try to time the market. So I don't like to put a lot of my capital in the stock market for that very reason. And the returns I earn in real estate are much higher than that anyways. And I don't have the volatility. I have a lot of the consistency and the reliability of the passive income streams. And then with the savings, it's like, if I leave my money there, over time, inflation is going to, ruin my returns, and I'm going to, lose out there. So I don't look at that as a great plan. Even though it's very hard to time a market, I look at even where we're at today, and the targets that we're shooting for in a lot of the deals we're doing are in that 16 to 20% range. And so with my capital spread out amongst many different markets, many different sponsors, and even different asset classes, I'm just looking for a blended return of 16%. And that's something that I think is very conservative, and it helps me sleep well at night, because I know it's not like I have all my eggs in one basket or all my money in one deal. And I know I'm going to have a lot that are going to perform a lot better than the 16%. And maybe there's some that come in right around there. And if I have one that misses, in a market like this, if we go through a recession, and a miss in the world of what we're looking at is generally in the 8 to 12% range. And when you put that in perspective of other opportunities out there, the potential to lose 20 to 30% in the stock market, if I'm in a deal where I might only make 8 to 12% and I get all these tax benefits, it's a no-brainer to me. And so I'm not trying to time the market. I'm just being very disciplined. You want to find a good deal. You want to make sure it's conservatively underwritten, but I'm not sitting on the sidelines right now. I mean, I have my capital to, put to work, but I also, will save a little bit just in case, I need it. But generally speaking, to me, I've not seen an investment that's still, is performing at the level that it has, and has, great resiliency in a downturn as well. I mean, you could look at it from the flip side of, a lot of the apartments we invest in that are, in the affordable housing, class B range, could even create more demand from a renter standpoint, because you got class A investors that might want to move to class B, and you got a lot of class B investors that this is already affordable housing for them and they need a roof over their head. So you might not necessarily be able to exit at top dollar in a downturn, but if you got the cash flow, which is a great benefit of being in these deals, you can ride it out and then sell when it makes sense. And so the flexibility around this type of investment is also very appealing. So I'm not locked into, we got to get out of the deal or we got to sell now. We ride it out as cash flow investors, and that's kind of the beauty of having the control of the cash flow in a large deal like this.